Shares in Asia dropped on Monday, with major markets across the region seeing significant losses as oil prices plunged amid fears of a price war after OPEC failed to strike a deal with its allies on production cuts. In the afternoon of Asian trading hours, the international benchmark Brent crude futures contract fell over 25% to $31.26 per barrel. Against this backdrop, Hong Kong-listed stocks of PetroChina and CNOOC plummeted 9.63% and 17.23% respectively. Saudi Arabia announced massive discounts on Saturday to its official selling prices for April, with the kingdom reportedly preparing to increase its production above the 10 million barrel per day mark. As a reminder, the cartel had recommended additional production cuts on Thursday, but that was rejected by OPEC ally Russia on Friday. The Nikkei 225 in Japan fell over 5.07% to close at 19,698.76. The Shanghai Composite was down 3.01% to about 2,943.29. Hong Kong's Hang Seng Index plunged 4.23% to close at 25,040.46. South Korea's Kospi also declined by 4.19%. Australia's S&P ASX 200 was down 7.33% to close as 5,760.60. Overall, the MSCI Asia ex-Japan Index fell 4.97%. Meanwhile, the yield on benchmark 10-year U.S. Treasury note fell below 0.5%, while the 30-year Treasury yield also hit a record low, breaching the 1% threshold for the first time in history. In Europe, markets tanked Monday as global investors braced for the spread of the coronavirus, and oil prices fell after the collapse of the OPEC talks. The Pan-European Stock 600 provisionally ended the day over 7% lower at 340.83, down more than 20% from its year high. Apart from oil, coronavirus is also dominating market sentiment. More than 109,000 people have now been infected by the virus, and more than 3,700 people have died globally, according to the latest figures from the World Health Organization. U.S. cases have now topped 500 and at least 21 deaths have been reported. The number of confirmed cases in Germany jumped by more than 100 over the weekend and is now up to nearly 800. Italy remains the worst European country with the worst outbreak, with over 7,000 cases. Italy's FTSE MIB closed over 11% lower, while Germany's DAX ended the day down almost 8%. France's CAC 40 slipped 8.4%, and the UK government held an emergency meeting Monday to discuss further measures to halt the spread of the virus. In the United States, the stock benchmark SPX dropped 7.6% on Monday, which triggered a temporary trading halt in its biggest one-day decline since 2011, which came after Saudi Arabia and Russia began a price war that threatens to overwhelm global oil markets with supply, causing crude prices to tumble 20%. Since hitting a record high on S&P 500, the index has lost over $5 trillion in value. The S&P 500 Energy SPNY index on Monday plunged 20% to its lowest level since August 2004. In currencies, the dollar plunged against the major counterparts as a plunge in stocks fueled bets on a deeper rate cut by the Federal Reserve later this month. The euro-US dollar jumped to highs just below the 1.15 figure, while the pound-sterling USD pair reached the 1.32 figure, and the US dollar-Japanese yen plunged to fresh long-term lows, marginally above the 101.00 handle. On Tuesday, the greenback saw a bounce amid the oversold conditions as the panic seems to be abating. On other markets, gold prices briefly jumped above the 1,700 handle early on Monday, but struggled to confirm a breakout and retreated partially, and since then amid the overbought signals. On Tuesday, the precious metal extends the correction from the recent rally, but remains above the $1,650 handle so far. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.